What's up, traders? Kevin here from Touchdown Trades. Today we're going to be talking about trading large cap stocks and more specifically trading breakouts on large cap stocks. Let's jump into the charts. Alright guys, so today we're going to be talking about trading large cap stocks and the breakout, intraday breakout. Okay, so I had a nice trade in this DKS, Dick's Sporting Goods today, so I'm going to be using that as the example. So we have the daily chart pulled up, 1 year, 1 day chart, and we're going to clear it out, start from scratch. And we're going to go through, and I'm going to show you my process of how I find these trades, okay? So I woke up this morning and I pulled up my pre-market scanner, which just shows me what's gapping up and what's gapping down. And DKS popped up. So I pulled up the daily chart and I just started mapping out the trend lines, okay? And you see it had a nice period of consolidation here and broke over this key level, right? So then what I also do is I want to go back and see, is there any resistance up ahead that we could be coming into? So I bring up the 3-year weekly chart. There's a little bit, we got a little bit up here around 52, 53, but nothing serious, right? So then I'm going to look at the monthly. And we do have a nice pocket, right? All the way up to really this pivot here at 58. And so I was immediately, once I saw that, I was looking for and also on the weekly chart, I noticed we had a nice trend that had been broken and gapped up over, okay? So after we got the technicals right, we want to drill down into the 5-minute chart. Okay, so this is what I saw pre-market. When I first pulled up my screen, this is what I saw. It had gapped up over the prior resistance, over the trend line, and started to hold the trend line, okay? So what we're looking for is something to risk off of, okay? So what I saw in Dick's was the gap up, the pull back in, and a ticker that's strong, that is not even going to come down and test the resistance. If it's truly strong, it's going to come down and it's going to get bought right back up. So when the market opened, I like to look at a 1-minute chart for my entries, but base the trade off the 5-minute. So I'm already long biased, so I drill down into the 1-minute. And as the market opened, it starts to sell off. And it just started hanging around here for a minute or two in this area here. And then it just popped up. And as it came up here, I got long, risking off of this low here. Okay, so I'm long through this move here, add into this breakout, and I hold all the way through this and selling into this resistance level here. I got about $1 out of it, a little more than $1, and it ended up going a lot higher, but I caught the meat of the move. And you also could have traded this move here, right? You would have used the low of the pullback as your risk and got back in, and you would have caught a nice another $1 or $2 move up here. So just to break it down, what we want to look for is we want to look for stocks that are gapping up into key levels, and we want to use those key levels as our risk, okay? So gapping up over prior resistance, and that resistance is now our risk. If it doesn't hold that support, prior resistance becomes new support, and if it doesn't hold that support, we cut it, we let it go, and we move out of the way. So the key to having a good trade is knowing your risk and knowing your target. My risk was the break of these lows, and my target was this pivot up here around 46. Okay, and I caught a nice dollar and change move on the bulk of my position, and it's a repeatable pattern. Okay, there's stocks gapping up every day that hold support and take off. Now, you're not going to get a winner every single time. You're going to have sometimes they're going to come back, test this level, come up and fail. But that's okay because you're not risking much. You're risking, you know what your risk is defined, and you're taking pieces off into the move. So if you trade these over time, you will be profitable. And some traders say, oh, I can't trade large caps because I have a small account. BS. You could have traded this with just a few shares. You're just making a bigger per share move, right? If you're trading a small cap, you're looking for a 30-40 cent move. You're trading a $40 stock, you're looking for a dollar move. And you could also have traded the options on this. Let me pull up the options chain. All right, guys, so this is the 45.50 call, the DKS 45.50 call that's expiring this week. And you could have traded the options on this. It opened up today at about 40 cents, right? And this is that initial pullback out of the open. And then this is not right. So we want to just get rid of this. Okay, so you have the initial pullback out of the open, and then it just goes, right? So you're in. As it breaks out, you can get in this consolidation at 90 cents. You're selling into the move, $1.80, and the call option doubled. So if you have a small account, you can trade large caps, and you can trade these options or the underlying symbol itself. So you could have bought in the calls. Say you got in at 90 cents and you're risking only 80 cents. You get in this break. So if you don't know how to check out the charts on the options chain for TD Ameritrade, I'll make a separate video for that. I'm not going to get into that. But it was a nice trade, and it's a repeatable pattern that happens every single day. The gap up, consolidation, and blast off. Right? I hope you enjoyed the video. Hit the like button for me if you got anything out of it, and subscribe. Catch you in the next one. Thanks.
Drop.